Time now for Options Insight. I'm Taylor Riggs, and joining me from the CBOE is Scott Bauer of Prosper Trading Academy. Scott, great to have you here. I first want to talk about a little bit of a recovery that we're seeing in the equity markets. We were on pace, of course, for our first weekly loss since December. Is there something bigger going on here, or is this a healthy pullback that we're seeing?
You know, it might be a combination of both, though I do really think it's just a healthy pullback. We came so far, so fast since those December lows that we saw that it really was time for a little bit of a pullback. Now, there's certainly risks that are out there. First and foremost is the U.S.-China tariff talks. There are other risks as well, but I believe this is really just a very subdued pullback and very much warranted in this environment.
Well, when we talk about a subdued pullback, one of those, of course, are the chip makers. I was looking at Qorvo this morning, for example, really looking at 0% growth despite a 5G rollout that they should benefit from later this year. What do you make generally of the chip makers as we sort of wrap up earnings season here for them?
You know, I think longer term, I love them. In the short run, meaning over the next, let's say month to 3 months, I think a lot's going to depend on what happens with the U.S.-China talks. Stocks like Micron, stocks like an AMD, if we get any sort of good signal that talks have begun, there's negotiations, these stocks are going to pop.
So you mentioned Micron. Walk me through a trade because that's one that you're looking at today. How are you positioning yourself in the options market for Micron technology?
So I'm giving myself 5 weeks. I'm going out to the March regular expiration, and I'm doing that because I want to factor in the supposed talks that we're going to have with China. Hopefully something good's going to happen. I'm buying an upside call spread, the 39.43 call spread, $4 wide. I'm trying to do that for somewhere between $1 and $1.10 or so. I'm using those strikes because the market expected move right now in the option market is about a $4.50 to $5 move out to March expiration. If we get that to the upside, it positions this perfectly.
I want to pivot quickly here just to the financials because yesterday we got that announcement that BB&T was buying SunTrust banks. That sort of sets up a look at the regionals versus sort of the large multi-cap banks here. Are you concerned about any sort of outperformance of the regionals versus sort of the large cap banks?
No, not really. I mean, I think the regionals are going to hold in well as the Russell holds in well. Maybe there's a little premium now in some of these regionals because of that transaction we saw yesterday. So maybe the market is going to price in a little bit to some of the other ones. But in terms of, just valid outperformance, no, I'm not seeing that.
Thank you. That was Scott Bauer from the CBOE of Prosper Trading Academy. And from New York, this is Bloomberg.